Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. And today it's another special edition of our debate series where we're bringing together to you three exceptional companies who are collaborating to do something which I think is absolutely game-changing and extraordinary in the marketplace. And we'll hear a little bit more about that later on. But from Baymarkets, we have Peter Fredriksson. Peter, how are you?
I'm good, thanks, Sue. Thanks.
Great to have you on the show. Magnus Almqvist from Exberry. Magnus, nice to have you on the show. Thanks for joining us.
Thank you. A pleasure to be here.
Absolutely lovely to have you. And Eric Saraniecki from Digital Asset. Eric, lovely to have you on the show as well. Thanks for joining us.
Good morning. Thanks for having me.
Not a problem at all. As we traditionally do, let's kick off with a couple of introductions. I've given you your names and companies, but Peter, can you tell us a little bit of background about the company and what you guys do, please?
Yeah, Baymarkets, we're based in Oslo. That's our headquarters. I'm actually based in Stockholm, but the rest of the team are based in Oslo. And we are, we're experts in clearing. So we're very domain focused. We all have backgrounds in clearinghouses or clearinghouse operations, clearinghouse development, and so on. And we only do one thing. We provide clearing systems to marketplaces, clearinghouses, exchanges, and we have a very exciting cooperation with Exberry and DA.
Absolutely, and we'll find out a little bit more about that very soon as a teaser there. Next on my screen is Eric. Eric, can you give us the same intro, please?
Yeah, absolutely. Eric Saraniecki. I'm one of the co-founders at Digital Asset. I'm going to pull on the experts thread that Peter threw out before. So we're experts on building systems of record. So the component of any system that houses all the core data that lives underneath any of your intelligence or sort of the clever things that you would do on top of that data. We build a whole bunch of tools, including an application development framework called DAML that allows you to build connected systems of record. And our vision is to create a global economic network of seamlessly interconnected businesses. And this offering here between us is an opportunity for us to start to showcase some of the fun things you can do with that.
Fantastic. Thank you very much for doing that. And last but not least, Magnus.
Thank you, Toby. Yeah, I like that expert angle. So I'll use that as well. We're that's why we three go together so well. I think we're experts on matching engines. It's central limit order books and matching engines. Exberry is a Tel Aviv-based fintech company. I personally am based in London. What we've developed is a cloud-native, very strong SaaS platform delivering capital markets grade matching engine technology that can be deployed physically on hardware in private clouds and on public clouds. And we're very easily integrated into wider ecosystems, and we meet regulatory requirements anywhere on the globe. We can deploy new production environments in days, and we have sandboxes running 24/7.
Fantastic. So I'm in the company of expertise, and I can feel it straight away from that as well. I love this. Look, this has been one of the themes of the last year, where I've spoken to so many different companies, and I think one of the big positive effects of the last year is really seeing a marketplace that's been quite legacy and enterprise orientated for many years, giving a sort of like for like service, has really been disrupted by people who have higher expectations of what is available and what people can be doing out there in the marketplace. And that's been driven by a number of different factors, and we'll talk about these, I'm sure, over the course of the next half hour or so, including speed and cost reduction and friction reduction and all these various reductions that we look for in the marketplace at the moment. But it's created this sort of perfect storm for good companies to come together with expertise in various different areas and saying, look, we aren't everything to everyone. We're here and we can give a tailored bespoke service that's really going to help move people further forward. Within that, we've also seen the sort of rise and rise of the digital asset space and, as a genuine asset class, so to speak, and it creates this really interesting position. Now, Eric, you have been described to me as the glue of this operation and how everyone's been brought together. Can you talk to us a little bit about the collaboration, why it's sensible and the sort of benefits that all of your customers are getting from working together?
Yeah, absolutely. So we've been lucky enough at Digital Asset to work with some of the largest exchanges and financial institutions in the world, whether we're replacing the ledger components of the clearing and settlement system in Australia for the Australian Securities Exchange, or working with the Hong Kong Exchange, Broadridge. We're working with all sorts of large financial institutions. There was a bond issued by SGX. And just we've learned a lot in working with these institutions. We've seen how they operate their own ecosystem of clearing and settlement, each with their own little nuances, with a lot of overlap across each of them. And one of my goals was to take that learned knowledge and distill it into something that would be a lot more approachable for other sized institutions, not necessarily a top 10 global exchange. And so we set out to build a bunch of libraries and tools that would really accentuate the best practices that we experienced across all these different institutions in an easy to consume bit. But the ledger is only a small component of it, right? So the ledger can only tell you what's the accounts, what's the positions, where is everything held, collateral management, things along those lines. You still need these components. Price discovery, it's a critical component of any market. You need these components of clearing and risk management. It's a critical component of any real market. And we're not going to build that. So I wanted to go and find like-minded individuals and institutions that were approaching this in a similar vein to us. I was really lucky to meet Magnus and Peter. We did some lightweight proofs of concept to start. At first, things went reasonably fast, and I was really happy with how these things work together. And so we've built more of a formal partnership at this point to offer a complete integrated option where you have a ledger, a matching engine, and a clearing and risk management system. They all work in concert as one unified product from 3 different vendors, and our customers buy 2 or 3 of us, 1 out of 3 of us, 3 out of 3 of us. It totally depends on each customer. But I think what's really fun about this is anyone can deploy it in a matter of minutes. Anybody can modify it to whatever they need. And we're really at the cutting edge of really some of the best practices that we've taken from our experience with these large institutions.
So the institutions is an interesting part for me as well, because I guess when you look at some of this sort of technology in this sort of area, we're looking predominantly at all people I guess generally shoot towards it being an emerging market area. Peter, I know you see this as something far bigger in established markets. This is absolutely fit for, right?
Definitely. I mean, obviously, the emerging markets are definitely in our target group because they all need exactly what we have. But also the traditional markets need to move towards the digital sort of world, and they don't have to replace the whole legacy they have. They can start with, start small and grow and even integrate with the legacy systems to gradually move into the digital markets.
And those digital markets are a fascinating sort of growth area at the moment, aren't they? With a lot of things that they're going through with, but and they're also, I guess, playing to what the sort of general consensus and need is of the market. The market is, I guess, ripe at the moment for looking for those things I said at the offset, where we're talking about friction reduction, or we're talking about cost reduction, or we're talking about speed. Eric, talk to us about the sort of benefits of speed as a starting point from there, because everyone's looking for that trading advantage. Everyone's looking for solutions which are easy to put in. Traditionally, that's put people off. A lot of innovation within technology is the time and effort that's been required to do this. Speed of deployment is one of the sort of real USPs of what you guys are doing, right?
Yeah, absolutely. So you can deploy a complete production instance of everything up and running literally in a matter of days, a POC in a matter of minutes. And all of the components that govern how the ledger works, they're all open source. So if there's anything that you want to change, it's very easy to change. Recompile it, drag and drop into the environment, and everything's up and running. So we've built this to really be responsive to institutions' need to innovate around the asset class, but not necessarily around the way that the markets behave, right? So there's a lot of experimentation about new things that are going to become more liquid, new asset classes becoming more liquid. But people expect the experience of when I place, a bid or an offer in a market, that's a guaranteed order. When that matches, I get my fill. If there's some net settlement, I don't have any counterparty risk. If there's a derivative, all my cash is taken care of. So there are these baked expectations of what a market is, even if it is a brand new asset class, a new basket, a new digital component, some really fun way to access some of the liquidity in illiquid assets. But the expectations of how the market behaves are always at the top of the list and always critical to being successful.
We've also seen a sort of something that's evolved quite so quickly there's sort of technology that sort of gets patched in and sort of bolted in a sort of ad hoc manner that creates a sort of Frankenstein's monster almost of solutions for it. And I think that affects the sort of clearing and settlement experience to an extent of what people are looking for. And you've got this enterprise technology that's been in place for many years, and it allows and has opened the door for companies who are a little bit more nimble like yourselves to come in there and collaborate and provide something that is, as we say, tailored to the actual needs, and creating that user experience, which I think is so important, reducing that friction that's been there. Magnus, if I can come to you and ask a little bit about how that sort of works and your sort of view about how that gives you guys the advantage against some of those enterprise solutions, which don't make it quite so easy.
Yeah, I think it is a really interesting area. The requirement, the need for a central order book that provides a strong and reliable and auditable price discovery is crucial for any market. Where you need to guarantee that it's fair and orderly, either it is to a regulator or it is to your end customers, the actual people placing orders on there, which Eric kind of emphasized, is that if you place an order into a market, you need to trust that market. You need to know that your order is treated fairly. You need to know that if there is an execution, someone will be able to explain to you why it was executed at that specific price, and then also that it's settled and you can trust the transaction to happen. So central limit order books will remain really crucial, to guarantee and to be able to prove time and price priority, for example, to have a surveillance system that monitors and detects potential market abuse. All of that requires lean and efficient sort of central matching technology. And
there's another element to it as well, right, Magnus? I mean, I think people overlook how important the components of anonymity are and the privacy and all these things, right? Like Goldman doesn't want the whole world to know what their total position in Apple stock is. There's massive front-running problems in these DEXs and DeFi markets where people that aren't even participating in the market are taking, orders out and front-running it if they're mining or anything else along those lines. And that's a big part of orderly markets is, fairness of when I place my order, that's the best bid. I'm getting the best execution. So I think that, in these big open public networks, the experimentation is fantastic. I love looking at it. I catch a lot of inspiration from what people are experimenting with. But I think that the lack of privacy and the lack of some of the guarantees that these markets make around an orderly market, I think cap the total activity and the types of assets that are willing to come into it. And that's the advantage that I see to one of these already trusted institutions starting to pick up some of these new asset types or making their existing asset types behave more like these new asset types, is that they sit at a trusted position in the market and they do guarantee those types of things, the privacy, the positions, the order execution. And so to bring that trust into new markets, I think is their edge. And their edge is not, taking 3 years to launch something on their legacy infrastructure. Their edge is to bring those markets quickly and then leverage their trust in these new places.
I guess the other sort of question that sort of gets thrown into this is why clearing is actually needed when digital assets are instantly settled as well. Peter, I know that's something which you've got some thoughts on.
Yeah, that's the first question we get, and any liquid market with liquid participants and maybe a little bit larger institutions, they don't accept having every trade matched by or settled one by one. They want to net their end of the day or during the day, and if you do start introduce netting, you also introduce risk, because then you have a time factor involved. So that's where the risk part comes in, and it's about trust. You need to have a trusted central party. The central counterparty does the netting for you and calculates the net and then pushes on some risk models onto this, so that you're always covered.
When we talk about risk and trust, I think this has been sort of one of the great sort of handbrakes, so to speak, on the financial markets. There's been a lot of conservatism because of as much as anything, the sort of stakes are fairly high. But also the fear of job loss or whatever it might be. I mean, people have played it pretty straight, which is always played to the enterprise, right? It's played to enterprise participants. And I think particularly the last year to 18 months, we've seen a lot more of an open market driven by this sort of collaboration of businesses similar to yourselves who've looked at different problems, say, actually, look, we can provide something that is far more tailored and bespoke and nimble, and as we say, cheap, quicker, or any of those sort of elements which people are crying out for at the moment within technology. So when facing those sort of conversations and having the questions that you've just been asked, and when you're speaking to institutions who are risk averse and happy with the status quo, but then crying into their pints at the end of the day about the inefficiencies of everything within it, how do you guys sort of manage that and give people the confidence to to then move away from from the enterprise in a world that's had all sorts of strangleholds, including procurement and all of these sort of issues that come up? What allows you guys to give people the confidence of that trust and such like?
I mean, I'll come at this from two different directions. One is, if you look at it in an organization like ASX, about 30 years ago, they made a decision to go fully dematerialized, and it gave them an edge over the rest of the markets in the world for 30 years. So they've really cut their teeth on making risky decisions, risky technological decisions, and executing them well and giving them an edge. So there's precedent within even the largest exchanges in the world of making these level of decisions to their advantage. The other side of it is that when you look at these crypto markets, most of the transaction activity is not trustless. It's still heavily trusted. There's a new brand of enterprise on the rise. If you look at the success of an organization like Coinbase, I mean, they're not all that different from a Clearstream or a Euroclear. They're a full depository. They hold all your assets. They have matching books. They do clearing. They may not call it clearing, but they absolutely are. You're not trading on the blockchain when you trade on assets and Coinbase. So they are in every way, shape, and form the same thing as these fully integrated exchanges and CSDs and ICSDs. And they have these massive market caps. They have a ton of cash, and they have much more nimble technology. And if you think that they're not going to come for traditional asset classes, you're not looking at the valuation on that company, because the pure crypto trading in there does not facilitate those valuations. So you have both a threat to them through the up and coming new enterprises, if you want to think of it that way. And you also just have the historical experience of those who have been more forward leaning on technology, have had better ROIs, ROEs, and longevity in the market themselves. So I think that history and recency tells us that you have to do this to stay at the front of the pack, and that if you are going to do it, it's better that you do it with vendors and experienced experts like ourselves that have worked with all of the peers of these different institutions and have distilled what we've learned into these offerings for them. So it is a responsible way to approach the new markets and the upgrade that's frankly just a necessity to compete going forward.
Yeah, absolutely. And I think it gives that sort of, you spoke there about competitive advantage, and I think companies over the last year have been crying out for that with pressures around increased cost and squeezed margins, etc. It's there and looking for those sort of pieces, which I guess levels the playing field a little bit for what's next to come. Magnus, this has been a sort of a period of rapid digital revolution, some might say, in terms of what we're looking at. We've seen a sort of petrol on the bonfire of digital innovation and everything that's been happening. Looking to the future and what comes next, how do companies like yours really sort of position themselves to take advantage of what's happening at the moment in the marketplace and give comfort and trading advantage to all of your users and your customers as much as anything else too?
Sure, Toby, that's a great question. I think two angles to that. One is just how crucial it is that your solution truly is elastic for kind of spikes in trading volumes, but then also scalable to kind of grow with your business. All these aspiring new digital asset exchanges and the incumbents launching digital securities, they all, of course, hope that their products will grow to a point where they become truly liquid and truly global. So they need vendors and partners that can start small, but then can expand and grow up to those kind of levels without expensive, large, lengthy upgrade projects. And the other one is the second angle, I think, is flexibility. We just don't know what the next kind of digitized asset is going to be. So your platform needs to be flexible enough to kind of whatever is thrown at it. We need you know, who knew that NFTs would become a big thing, and suddenly they're here. So you know, our technology that we provide needs to cater for whatever is beyond this point, because we just don't know what it is.
Yeah, that sort of volatility and agility is so critical to what we're talking about, and I guess what sort of really intrigues me about this is, you know, when Eric opened up, he was talking there about how you know, how it was, you know, I knew I needed to find some different partners to this, and I think you said you were fortunate to be introduced to Peter or find Peter and Magnus. Peter, I want to talk to you about that approach and what made it so attractive to you to say this absolutely becomes a no-brainer for you. It sort of changes the game a little bit, because I think traditionally there's been a lot of, I guess, to use a metaphor, people want to play with their own toys and don't like to engage an awful lot. That's been the traditional world of the financial markets, right? People haven't liked to share their toys. They haven't liked to engage with other people. Everyone's sort of very proprietary. This is a new world where this is becoming more commonplace. And I think there's still a lot of people who will be a little bit more siloed in what they're doing. And I think the advantage is coming from those people who are opening their doors and saying, yeah, let's look at this and see how we can help each other out. When you got the knock on the door from our glue man, Eric, tell me a little bit about what made it such an interesting decision for you.
I would say, first of all, the ease to connect these systems using DAML as the glue. It's you know, from you know, not knowing each other's before to having a fully functional exchange with trading and clearing and handling collateral and risk and everything in a you know, viewable, you know, very nice and easy GUI to look at. I mean, that was almost impossible before, to create such a, you know, a huge system in legacy terms in such a short time. Yeah.
And I think it's quite interesting there. You talk about, you know, that to have done this with people you never met before, et cetera, and do it so quickly. This has been one of the sort of weird scenarios of the last year that, you know, we spoke about this at the start. I've heard Oslo, I've heard Tel Aviv, I've heard London, I've heard geographies all over the world here that we're talking about, and suddenly the world's become a lot smaller a place. Within that, when you move into this sort of relationship and partnership where bread hasn't been broken, where you haven't sort of sat around a table and met each other and sort of formalized that relationship over a number of different meetings, how interesting has that been? How sort of easy was it to sort of forge the relationship between the companies without having had that sort of physical ability to sit down and really, you know, whites their eyes, to use a now dated phrase?
I think we're all like-minded. That's the first and the foremost important part. That we think alike and we work alike, and we don't need to have all these documents and agreements written up before we start working together.
You know, as you said, we're all like-minded. I looked at the screen and all three of you were nodding at exactly the same time as you were saying that. I hope the camera picks that up as well. Magnus, do you want to add on to that as well?
You know, I think it's a really good and pertinent observation you're making there, and I think and I've been amazed through the period of pandemics and no travel, that just how well it actually works to do business via Zoom. And we3 is a great example of that, where you know, it's so easy to kind of meet people and be really efficient about it, right? I speak to people in Asia Pac in the morning, Europe during the day, and in the evening it's US. And to be that global from your spare living room, or spare bedroom, is just amazing.
Who needs sleep anyway, Magnus? Huh?
Yeah. They're being a little bit humble. I mean, I think it's an expression of their expertise that they know the boundary of their systems. I think that where I was turned off by others is that you would speak to someone and they think that clearing is this massive thing that includes all this other stuff that isn't clearing. Or you would speak to someone who's doing an exchange, and they don't know where matching goes versus other. And I think it just speaks to us knowing our value props and knowing the right boundaries of where our components go, that there's never really any disagreement, because we're strictly complementary and additive to each other. So there isn't anything for us to lose by working together. And that is a subtle byproduct of people really knowing how markets are structured and understanding how these things go together.
Yeah, I guess that sort of meeting of expertise is a great, I guess, sort of a foundation for a partnership like this to to work. And knowing those value props, I do a lot of work through the magazine, The Financial Technologist, to sort of really identify some of the good and great and upcoming companies in the financial technology markets across the world. And I talk a lot about the golden thread. What's the thing that keeps those companies growing and succeeding through difficult times? And overwhelmingly, if you look at the common threads of those businesses, that golden thread, you're looking at businesses who absolutely know what they can do, and they don't try and be all things to all people. They look at really running in their fields and being able to provide great solutions in the areas they look at. And I think that's probably testament to the fact that those can come together with you guys and provide a real solution to a business, rather than someone saying we can do a little bit of everything. And that is where the disintermediation of the legacy seems to me, the enterprise firms, seems to be a real opportunity for businesses to come and disrupt that, which I love to see. I could talk about this for a long time, but I'm also conscious of the clock. So there's two things I want to finish up on. The second of which we'll come to, which is who should be talking to you and how best to do that. But we'll come on to that in a second. The other bit, which I just want to throw you as a question that I haven't prepped you for, but I'm always interested in. If we look at this space and we look at the next 12 months, in a period where we've had so much volatility over the last 12 months that's come through, if you guys can each give me a prediction of what you think is some of the themes that we're going to see, the main themes that we're going to see over the course of the next year within the markets, I'll be really interested to do that. And it's something which I hear different things from different people. I'd love to hear your thoughts on what's there. Peter, again, using my screen here, you're the one who's up there closest to me, so you can catch that one first, and it gives Magnus and Eric a little bit more time to think about an answer for it. But Peter, over to you.
Just like you said, it's been very volatile. It's been a lot of volumes and liquidity. That means that many of these products that are traded cash today, or digital assets and other products as well, they will move into derivatives. And as soon as you move over to launching derivatives, then you need to have all of the risk management tools. So that's my prediction for the next 12 months, that we will see a lot more derivatives being launched.
Yeah. I think that's fair to say. Magnus, you're nodding there, but you can't have that one as well. Over to you for prediction number 2.
Yeah, that was a good one, and I'm a little bit jealous that he was able to come up with that on the spot. So I think that what I've been blown away with in the past year is how cutting edge these public markets are in experimenting in totally different capital formation, capital deployment, asset creation, labor markets. It's just really pushing the edge of what connected applications, connected financial applications enable the market to do. So I think over the next year, you'll see what was a little bit more of a traditional mindset of lift and shift. So a lot of the enterprises thinking about how they do their existing business in new technologies. I think you'll see the ones really at the forefront of the pushing the envelope, that they might start to experiment with some new business model ideas as well. They might think a little bit outside of just the traditional lift and shift. And where I think this could happen is, the theme of your show today, if I had to sum it up, would be collaboration. I think that if you saw a group of clearinghouses or a group of CSDs or a group of exchanges say, how can we do cross collateral? How can we do cross margining? How can we do settlement across these different CSDs? Just starting with that, that's already a new business model as far as they're concerned. And it's taken just enough inspiration from the really extreme experimentation taking place in these markets, and it would make a huge difference to the risk and the value of all these different markets and asset classes. So, I think over the next year, you'll see more people pushing the boundary on collaboration across these institutions, because that's what a lot of these technologies are enabling as they go forward.
Yeah, I absolutely agree with that. Collaboration is an overwhelming theme that I've been hearing over the last 6 months, I'd say, in particular as well. And I think it's driving great innovation and value to the industry as well. So 2 good ones taken there. There's only one to go. What have we got?
Sure. I'll give you two actually.
There we go.
Yeah,
there we go. That's
I had more time to think. The first one is that in the next 12 months, we'll see several major stock exchanges or stock exchange groups officially launch digitized asset business lines that are in parallel to their incumbent business. So that's the first one. The second one is, I think, which excites me tremendously, is that the creativity around the types of assets you digitize. I think that's where we will see true innovation, and it kind of borders into what Eric is talking about, where you create completely new types of investment structures. And information and events, for example, if you combine these two together, you can create completely new types of index-like structures that kind of measure the temperature of the world, whatever it is that you're underlying. So that's one idea, for example, that we haven't really seen yet. And then there will be new things that I'm just too stupid to ever imagine. But it's very exciting to see.
Yeah, I mean, Magnus's last point's a good one, that we have a number of incoming of people that are merging markets that have never really overlapped before, like price discovery with supply chains, and your Instagram, Instagram and price discovery. Like, there's just so many interesting mashups of markets coming to other arenas and other verticals, and I think that's what's going to be really interesting.
No, great. Very, very interesting. Very interesting. So look, there's so much we've covered over this sort of area, but we haven't even scratched the surface of, I think, of the potential of what you guys are able to deliver. I want to ask that there's going to be people watching here who are itching to find out more. There's 3 different areas that they can go to get that information. Who should they be talking to, and who should be talking to you at the same time? Yeah, I'll throw that open because it's open to each of you, whoever wants to be the spokesperson on that one. Who needs to be getting in touch with you here? And what's the best way of them doing that? Whose door should they be knocking on first?
The easy one is they can talk to any of us because we work together.
There's the collaboration. That was a test.
Yeah. And who should be talking to us are basically everyone thinking about getting more digitized or launching digital assets, whether it's emerging markets or the traditional space. It could be the technology side, it could be the business side. It's really anybody who wants to even learn more about how they could take advantage of these instruments could definitely approach us.
Fantastic. Listen, I've been saying all the way through this last year that every single time I do one of these shows, I'm picking up more and more information and knowledge, and this has been fascinating. It's been so much cool stuff to learn and pick up from you guys. It's been something I've said many times. This is my MBA over the last year or so, to hear great innovation and thought and business leadership. And I love the fact that you guys have been creative and come together and found a solution that can add so much value to the marketplace. I wish you huge luck with it, and I'm sure there's going to be plenty more success to follow, and we'll be hearing a lot more about it as well. So Peter, Magnus, Eric, it's been an absolute pleasure. Thank you very much for joining us on the show.
Thanks a lot.
Thank you. A pleasure to be here. Thank you so much.
Thanks so much for coming, and thank you all for watching. We will see you soon on another episode of Fintech Focus TV. Thanks so much.